Navigating this housing market has been tricky, and so today I just want to give you the straight numbers, what is going on in the Spokane market, so it can help you interpret your home buying or selling experience over the next few months here. Prices are remaining relatively the same, inventory is continuing to go up, and I just think across the board, expectations are really the key thing here. And so I want to give you just as much data as possible so that you know what it's going to be like when you jump into the market, or if you should jump into the market. So looking at my screen here, we're going to check out median sales price. So in the month of October, we actually went down one more time, which is relatively normal. But the biggest thing that we're seeing, I mean, between 2022 and 2023, we're seeing way more dramatic increases and decreases in that time versus any other time in the last 8 or so years. They shrunk my graph here. I'm hoping that I could get this longer so it's like a 10-year period, but we're cut off at 2016 right now. But prices right now in Spokane, 413,000, down 2.5% from last month, and we are just barely just under 1% year over year. And so if you bought last year in October, you could basically imagine that your house price is about the same as the time in which you bought it. But we're going another year. We're going a full year where people that bought from about March of 2022 through September of 2022, probably seeing a decrease in your home value in that amount of time. And I think that you're probably going to see that for at least another year, if not maybe 2. Just depends on what happens with interest rates and what that looks like. But there are going to be a lot of people in this little 6-month window that need to transact in the next year or 2 that are going to be maybe not underwater. Hopefully their down payment was large enough, but there are going to be some FHA loans, some VA loans, some low down payment people that have assumable loans. Not to say that interest rates were very good at this time, but there's just going to have to be some creativity to get some of these people out of these houses, or we're going to see a lot more rental properties hitting the market because they just cannot sell them. So one key indicator to just keep an eye out for is, are we going to hit 300,000 in January? So are we going to have a 3 in front of the number? So last year by December, we were at 395, January 380. The year prior, in January 389. And so it'll be interesting to see if we drop another, what would that be? Another 2.5% or so in order to see a 3 in front of the average price. But this could possibly be the last winter that we have a 3 in front of the average home price in Spokane, because even if prices go up by 1% next year, we would be out of that. So that's something to consider, is that the average home price may never have a 3 in front of it ever again going forward. So the question is, why are prices not dropping more with interest rates where they're at? Which there was good news this week. Interest rates came down from 8% to about, the lowest I saw was about 7.35, but that meant that FHA and VA loans actually had a 6 in front of them, being around 6.8%. And I can't believe I'm celebrating those things, but it was a lot. That is great news. And so if you are somebody that is specifically FHA, VA, your interest rate has come down, upwards of 1% in the last week here. So if you're sitting on the sidelines, that's a difference of about $250 a month in your monthly payment, $200 to $250. So that makes a big difference in your DTI. So I would definitely reach out to your lender if you are shopping around right now. But the reason prices are staying relatively flat and not dropping more is just because of the lack of new listings. In October, we had 744, which was down from the month prior 25%, and from last year just barely up, basically flat. But from any other year prior, because we were already in a super tight inventory market last year, but in the markets where we thought we had super tight inventory, we had 890 listings in 2021, 953 in 2020, and 897 in 2019, and so on. And so we're short about 150 active listings from what has been our past few markets. But active inventory continues to rise because there are so few buyers in the market because of affordability. And so active inventory is sitting at 1,334 right now. That's down a little bit from last month, but up almost 3.5% from last year. And just looking at this peak graph, you can see that we're sitting right around where active inventory was in 2019. So really, this isn't really bad. I mean, the thing is expectations. And I want to show you something that's really a telltale sign that expectations are not being set properly or met, is the number of unsold listings going on. So this means listings that were on the market and then expired. Many people are only signing a 30-day listing agreement and then relisting constantly to get their listing back up at the top of the list for more exposure. So this number can be a little skewed depending on how many of those is happening. But you can see that last month we had 355 listings go unsold, 380 in the month prior. And really, this started to happen in 2022, right as interest rates were increasing. Sellers were realizing, oh wait, I'm not going to get the price I want. We had a little bit better over the summer. Things were starting to sell. And then again, it's just prices coming down. House is sitting on the market for a lot longer. We haven't had this many unsold listings since 2017. Even then, that was the peak high, October of 2017. So even for we're really in that more normal market now, but just the way that this has been increasing really is showing me that pricing is off. Sellers are pricing more based off of the past data, which is really all we can do. Like, real estate is a lagging indicator. It takes time for us to realize what is happening because it takes 30 to 45 days to sell a transaction, to sell a house. So it just takes time. And if we're using the previous data to see how fast things were selling for and for how much, then we can't really predict the future as well, and we're not pricing ahead of what's coming. Most people are pricing based off of what has happened instead of pricing for what is going to happen or what is happening. And we're seeing that things are slowing down so dramatically that you really have to consider pricing much lower than you anticipated. Like, try to get underneath the market and try to come up from the bottom versus be chasing it down, because it's never a good situation to be chasing it down. But for the buyers out there, this is a sign that there were 355 sellers of some variety that want to sell their home but didn't sell it. And so that's an opportunity right there. Work with a realtor that's willing to go through that list with you, identify a house that might work, and then let's see if we can reach out to them and figure out if their pricing was unreasonable or if that is something where a deal could be put together, because there's a lot of opportunity there. So looking at days on market, this is really mostly concerning for sellers, but also have some info for buyers. This is basically broken out into $100,000 price ranges, and this is the average. So overall, it's 21 days on market right now, and it's relatively consistent throughout the price ranges. 300 to 399 is about just under 3 weeks. 400 to 400K is actually taking longer than 5 to 500K. That our median price point here in Spokane. There's more inventory available in that price point. But then obviously if you're above that $1.5 million price point, taking almost half a year, we're in the 5-month range on that. But even $1 million to 1.5, things are moving really relatively quickly. And something that I've been noticing and I think is really interesting is this is the number of cash sales that are going on. So of course, below 200,000, almost a majority of homes sell for cash, 57%. I mean, that's our manufactured homes. That's just our flip houses, our deals, the people that are going to renovate those homes and sell them later. So that's pretty obvious. But overall, we're about 20%, 1 in 5 homes sell for cash in Spokane. Like, this jump from the average home to over 750,000 to $1 million, being about a third of houses sell for cash, I think is very interesting. What I'm noticing is more of my affluent clients that have the reserves, the money for that, they're saying that I'm just going to buy this house for cash right now. I don't want the monthly liability. The payment's going to be way too high. These people are very conscious of the economy because they have businesses and things like that. And so they would rather just make sure that they don't have any monthly payments. They're just going to hold their cash in the house for now. And then if interest rates go down and make more sense later, they might put a mortgage on the house at that time and then reinvest their money somewhere else. And so I just think this is interesting to see that the more wealthy people here in Spokane that are buying these more higher end homes, because $1 million is that upper tier. There's not a lot of homes between that 1 to 1.5 million that sell every month. But I just find this interesting, and I like to learn from people that are in this position. And so many of them are choosing to buy cash right now and then maybe mortgage it later if it makes sense. So now looking at percent of list price received, this gives buyers an idea of how much they should be offering on a typical house. So many of these homes are selling for between 98 and 99% of the asking price. And so take whatever price you're looking at, let's say it's 500,000, and shave off 1% for sure in your asking price, because that's relatively average. I mean, unless your realtor is advising you that there's competition on it, that there's multiple offers, things like that, then obviously that's probably not going to work out for you very well. But typical home, if it's staying on the market for over 21 days, as we were seeing on average, then you should at least be able to get some sort of concession on that property, be able to come off of the asking price at least a little bit. So don't hesitate on that. But if you're in that 200 to 300 range, they're actually still selling above the asking price, and there's limited good inventory. I mean, this is for the homes that are actually selling, not just the ones that are sitting there on the market. So now a lot of you are asking me if right now is a buyer's market or a seller's market, and really now my answer is I've been saying that it was still a seller's market, because usually anything that is below 3 months of active inventory is a seller's market. But there are actually segments of the market where it is starting to switch, and we are considered just a neutral market. And so if we're looking at the number of closed sales between 500,000 and then like that 750 price point, so that 5 to 600 we had 50 homes sell, and between that 6 and 750 we had 32 homes sell. So now if we go look at the active inventory in those price ranges, a 600 has 194, and then the 600 to 750 has 196. And so if you divide the number of active inventory by the sold listings, that actually puts us at a close to, if not above, an average of 6 months of inventory. So that is the first time I think I have seen that, or I'm talking about it. But 6 months of inventory is that transition into a buyer's market where you have the most amount of leverage. So it is very interesting to see that switching over in this amount of time, 6 months of inventory, but we're still only about 99% of asking price. So one, I just think that there's a lot of sellers that are not willing to accept the price of the property that, like where it is right now. Buyers are also not willing to submit those offers that they feel. That's what I'm seeing on some of my listings, is that the seller is open to an offer and open to a conversation. We just want somebody to submit an offer and talk to us. And so what we are noticing is that most buyers are not in the mindset of negotiation right now. That's not something that we're used to. We're not used to submitting a lowball offer and just seeing what happens. So there's a lot of opportunity, especially in this upper middle price point, that there's a lot of homes on the market, over 400, almost 400 in this tier, and only about less than 100 of them selling or so. So it's about 1 in 4 homes that are in this price point right now are actually selling. So whether you're a buyer or seller, that was kind of a lot of information, but it should really help you out in this market. If you're a seller, make sure that you have really good expectations, that if you are going to move, that you just know, if you have to move, that this house might not sell for exactly what you want it for. If you're not a crazy motivated seller, then I don't know if now is the time to do it, because you are probably just not going to get what you're hoping to get out of it. And buyers, even though things are super unaffordable with interest rates being where they're at, there is a lot of opportunity out there. And so we just can't be hesitant to have a lot of conversations with sellers and listing agents out there to see what kind of deals we can put together. So I hope this transparency is helpful to you. If you found anything interesting or you have any additional questions, leave a comment down below and I will 100% get get back to you as soon as possible. And if you have no idea who I am, my name is Haydn Halsted. I'm a real estate agent here in Spokane, helping people just like you buy, sell, and invest real estate in the Spokane, Washington area. If you have any more additional questions or you want to schedule a private meeting with me, use the link down below in the description to schedule a meeting on my calendar at a time that's convenient for you. Thanks so much for watching, and we'll see you in the next video.